How to Rewire the Ancient Brain, the Intelligence Paradox, and the Silent Saboteur. Let me ask you a question that perhaps haunts you in the quietest hours of the night, when the noise of the day subsides and you are left alone with your thoughts. Why aren't you rich yet? No, I ask you not to brush this question aside, but to truly stop and reflect on it. Look at yourself objectively. You are intelligent, educated. You are not afraid of work, and you put in a massive amount of effort. You are perfectly aware of the theory. You know that you need to save more, invest smarter, and make weighed, rational decisions. And yet, why isn't it working? Why is there such a chasm between your knowledge and your bank account? Why do you see people who are objectively less intelligent than you, people with less cultural baggage and intellectual potential, building huge fortunes while you continue to fight for financial survival? Why does your neighbor, who barely finished high school and hasn't read a single book on economics, possess more capital than you? You devour articles, watch educational videos, try to learn, search for that secret ingredient, but still, you do not move forward. The answer I'm going to give you is one that no one likes. It is unpleasant because it removes the blame from external circumstances and points the spotlight inward. Your own brain is sabotaging you right now, every single day. This is not a metaphor. Your mind compels you to take actions that feel absolutely right, logical, and natural. But it is precisely these actions that keep you in poverty. And the scariest part of this tragedy is that you don't even suspect what is happening. You are convinced that you are making rational decisions. You think you are managing your money wisely. But this is an illusion. The truth is that your brain is running on ancient software. This operating system was developed millions of years ago with one single goal: to keep your ancestors alive in jungles full of predators. It was not created to make you rich in the modern world of digital assets and complex markets. And until you understand the mechanics of this internal betrayal, until you realize how your own mind works against you, you will continue to toil and remain penniless. I have spent 7 decades studying this phenomenon. I tried to understand why some people soar to the financial Olympus while others drown. And here is what I have concluded. Wealth depends almost not at all on how smart you are, how hard you work, or even how much money you start with. It depends exclusively on how you think. People who become rich think differently, not because they are geniuses born with a calculator in their head, but because they have understood the psychological traps that keep everyone else in poverty and have learned to avoid them virtuously. Today I intend to crack this mechanism open. I will not show you abstract advice or motivational nonsense that makes you feel good for 5 minutes. I will show you specific mental errors that you are making right now, and that guarantee you will never build capital. And more importantly, I will give you the tools to fix it. We are not here to make you feel good. We are here to rewire your thinking about money so that you actually get rich, rather than just dream about it. The dictatorship of fear. Loss aversion. Let's start with the first and perhaps the most powerful way your brain deceives you. You are deathly afraid of losing money. I mean a real, primal terror. This fear in you is much stronger than the desire to earn. Scientists have proven this and named the phenomenon loss aversion. Imagine the physical sensation. The pain of losing $100 feels approximately twice as intense as the joy of finding or earning those same $100. Think about this mathematics of emotions. Your fear of loss is literally twice as powerful as your desire for gain. And this asymmetry kills your wealth because it is exactly why you become paralyzed. You are so afraid of losing that you never take a reasonable risk. You keep your money in a savings account that earns pennies and doesn't cover inflation, simply because, at least I won't lose it. You sell your winning investments too early, as soon as you see a small profit, because you are terrified by the thought that the market will turn and this profit will vanish. Conversely, you hold on to losing assets endlessly, for years, watching them melt away, because to sell them means to admit a loss. It means facing the pain of a mistake, and your brain will do anything to avoid this pain. Each of these decisions feels safe, wise, and cautious in the moment, but they are all wrong. They are dictated by the same trap. Your brain values avoiding pain higher than acquiring wealth. Let me give you a real example so you see the absurdity of your thinking. Suppose you have two investment opportunities. Option A, a guaranteed income of $5,000. Option B, a 50-50 chance. Either you get $10,000 or nothing. The overwhelming majority of people, without thinking, choose option A. It seems safer, right? But mathematically, these options are identical. The expected value of both is $5,000. But your brain's fear of a zero outcome, of the potential loss of the bird in the hand, forces you to choose the sure thing. Now let's flip the situation. Option A, a guaranteed loss of $5,000. Option B, a 50-50 chance. Either you lose $10,000 or you lose nothing. And suddenly, in an instant, behavior changes. Most people choose option B. They are ready to gamble, ready to risk even more, just to avoid a guaranteed loss. Your brain is inconsistent. It forces you to avoid risk when you look at profit, and seek risk when you look at losses. And both of these tendencies cost you money. People who create wealth have learned to suppress this instinct. They have trained themselves to think about risk differently. Not, how much can I lose, but what is the probability and expected return? They take calculated risks where the upside potential exceeds the downside potential. They do not panic and sell when markets fall. They do not hold failing assets in the hope that they will bounce back. They think rationally, not emotionally. And here is what most people do not realize. Refusing risk is itself a risk. If you keep all your money in cash out of fear of losing it in the market, inflation slowly but surely devours it. You think you are safe, but in reality, you are guaranteeing yourself poverty in the future. True security is not the avoidance of any risk, but the acceptance of smart risks where the odds are on your side. The call of the pack. Social proof. Let's move on to the second trap, which is incredibly difficult to escape. You do what everyone else is doing. You cannot help it. Your brain is wired to follow the crowd. This is an ancient survival mechanism left over from the times when we lived in small tribes. If everyone in the tribe suddenly starts running, you better run too. Don't stop to think. Don't ask why. Just run. This strategy saved your ancestors' lives when a tiger was nearby, but it guarantees to leave you bankrupt in modern markets because the crowd is almost always wrong about money. Think about it. When everyone is buying stocks, it means their prices are already at a maximum. They are expensive. When everyone rushes to buy real estate, it is a sure sign of an overheated market. When every taxi driver and hairdresser tells you that cryptocurrency is going to the moon or that tech stocks cannot fall, that is exactly the moment when smart money quietly exits the game. But you do not exit. Your brain sees others making easy money and screams at you, "Buy now, or you'll miss the chance forever." And you buy at the very peak. Everyone is excited. Everyone is getting rich on paper. And it feels safe because you are together with everyone. And then reality sets in. The market crashes. Now everyone panics and sells. Your brain sees everyone around losing money and screams, "Sell now before it gets even worse." And you sell at the very bottom. Buy high, sell low. The perfect formula for eternal poverty. And all this happens only because you allow the crowd to control your decisions instead of thinking for yourself. I will tell you something painful. Going against the crowd is hard, incredibly hard. Not just intellectually, but emotionally. When everyone around you seems to be getting rich, and you sit on the sidelines because you consider the price is overblown, it hurts. You feel stupid. It seems like you are missing the celebration of life. People may call you an idiot. The psychological pressure to join the madness of the crowd is intense, almost unbearable. But it is at this moment that you must resist. The crowd is always wrong at the extremes. When being different hurts the most, that is when it is most profitable. When everyone thinks you are crazy for not buying, prices are too high. When everyone considers you a madman for buying, prices are low. People who become rich are those capable of enduring this psychological pain of being the black sheep. They are ready to watch others make money and wait. They are ready to be idiots right up until they turn out to be right. Recall any market bubble in history: the dot-com bubble, the real estate bubble, cryptomania. Every time, the majority was convinced that prices would rise forever. Everyone had a story why this time it's different. And anyone who called it a bubble was mocked. And then everything collapsed. And those who were getting rich lost everything. Your brain wants to be part of the crowd because being alone is scary. But this psychological pain is the price of wealth. You either pay it by being a contrarian when it is hard, or you pay a much higher price by following the crowd into the abyss. The illusion of time, hyperbolic discounting. Here's another trap that is likely costing you money right now. You value today much more than tomorrow. Psychologists call this present bias or hyperbolic discounting. $100 today seems real, tangible, valuable. You can hold it, spend it, get pleasure right now. $1,000 in 10 years seems like an abstraction, something distant, almost fictional. Intellectually, you understand that this is wrong, but emotionally, your brain cannot cope with it. That is exactly why you cannot save money. Not because you don't want to, and not because you don't know that you need to, but because spending today gives a dopamine hit, and saving for some old man that you will become in 30 years triggers no emotions. The pleasure of buying today is immediate and intense. The pleasure of having money in the future is abstract and weak. Therefore, you spend on things you don't need, on experiences that don't matter, on junk that seems important in the moment, but becomes meaningless in a week, and you remain poor. Let me paint a picture. You are thinking about buying a new car. You don't actually need it. Your current car works perfectly fine, but this one is new. It is beautiful. It would be nice to drive it, show it to friends, breathe in that new car smell. This is immediate gratification. Your brain literally tastes this pleasure. And now, compare this with another thought. If I don't buy this car and instead invest these $30,000, in 30 years, they could turn into $200,000. Which feeling is stronger? The immediate high from a new toy, or the dry idea of money 3 decades later? For most people, the car wins every time because the brain is programmed to devalue the future. $200,000 in the future feels less valuable than $30,000 of pleasure now. Rationally, this is madness, but that is how human psychology works. People who become rich have found a way to make the future real. They train their brains to value tomorrow almost as strongly as today. How? Through calculation and visualization. Every time they are tempted to spend money on stupidity, they calculate how much that money would be worth in 20 years with proper investing. I will give you an exercise. Next time you want to buy something expensive and unnecessary, do this calculation. Take the purchase amount. Assume an 8% annual return over 20 years. That purchase for $1,000 is actually $4,600 of your future capital. That car for $30,000 is $140,000 in 20 years. Now the deprivation becomes real. You are no longer choosing between a car and air. You are choosing between a car today and $140,000 in the future. What do you want more? Most people never do this calculation, so their brain never faces the real trade-off. Start making the future real, and you will see how your habits change. The mirror of lies. Confirmation bias and anchoring. Let me show you another mental trap. You see only what confirms what you already believe. This is called confirmation bias. Your brain does not need the truth. It needs to be right. Once you believe in something, your brain starts actively looking for evidence supporting it and ignoring everything that contradicts it. This happens automatically, unconsciously. Your brain literally filters reality. You consider yourself smart, so you remember only your successful decisions and conveniently forget the bad ones. You think that real estate always rises in price, so you notice every article about rising prices and ignore every warning about a bubble. You consider yourself a great investor, so you remember the 3 stocks that doubled and forget the 7 that fell to 0. Your brain lies to you about your own track record, and you believe it because a sweet lie is more pleasant than the bitter truth. Here is what it looks like in life. You buy a stock because you believe the company is undervalued. The stock falls. Do you review your analysis? No. Your brain looks for reasons why you are still right. The market is wrong. It is temporary. Other investors just don't see what I see. You find articles supporting your opinion. You hold the stock. It continues to fall. You lose 50%, 70%, 90%. And all this time your brain was protecting you from the truth. You were wrong. This is deadly for creating wealth. If you do not see your mistakes, you will repeat them forever. Rich people are brutally honest with themselves. They keep a record of their mistakes not in their head, where memory can rewrite history, but on paper. They conduct a post-mortem of bad decisions. What did I think? Why did I believe this? Where was the mistake? Warren Buffett and I have been doing this for 60 years. We look for information that contradicts our beliefs because we know our brain will not show it to us on its own. And here is another mistake that costs you money every day. The anchoring effect. Your brain clings to the first number it hears and judges everything else relative to this anchor. You bought a stock for $50. Now it costs $30. You don't sell because you are anchored to the figure 50. You wait for the price to return to the purchase level. You think you haven't lost money until you sell. But the market doesn't care how much you paid. The only important question is this a good investment at the price of $30? Would you buy it today at this price? But you cannot think clearly, because the number 50 is stuck in your head. Or you are buying a car. The seller shows you an option for $40,000. This is the anchor. Then he shows you another for $35,000. To your brain, it seems like a profitable deal. After all, it is $5,000 less than the anchor. You feel like a winner. But perhaps this car is worth only $30,000. You are overpaying, but you feel that you won because you beat the anchor. The seller knows this. That is exactly why he showed the expensive model first. The same with salaries. The first number named in negotiations becomes the anchor. If you say, "I currently earn $60,000, that becomes the starting point. The one who sets the anchor has a huge advantage. To defeat anchoring, you need to completely ignore the first number heard. Erase it from memory. Conduct your own analysis from scratch. How much is this really worth? This is independent thinking. The burden of the past and the ego trap. Sunk costs and overconfidence. The next mental trap might be the most expensive of all. The sunk cost fallacy. You have already spent money or time on something, so you feel obligated to continue, even if it is obviously a bad decision. You are emotionally attached to resources that are already gone. You have been working at a hated job for 5 years. It pays poorly. You are miserable. But you don't quit because you tell yourself, "I have already put 5 years into this. I can't throw it away." Those 5 years are already gone. They are sunk costs. The only question is, what to do next? If the answer is to find a better job, then do it. The past 5 years do not matter, but your brain perceives them as an investment that will go to waste if you leave. You invested $10,000 in a losing business. You lose money every month, but you invest more because if I quit now, I will lose those $10,000. Those funds are already lost. By investing more, you will simply lose $20,000 instead of 10. But the brain cannot accept the loss, so it throws good money after bad. I have walked away from investments into which I poured millions, not because I don't care about money, but because I understood. That money is already gone. To stay would mean losing even more. Rich people understand this. When a strategy stops working, they change it. They do not care about how much has already been invested. Only the smart move in the future matters. And finally, overconfidence. Your brain convinces you that you are better than you actually are. 90% of drivers believe their driving skills are above average. Mathematically, this is impossible. 94% of professors believe they teach better than average. Everyone thinks they are special. You read a couple of articles, pick 3 stocks, 2 of them go up. Your brain concludes, "I have talent." No, you got lucky. But the brain does not distinguish luck from skill on small samples. You become overconfident, take big risks, and eventually lose everything. The cure is intellectual humility. knowing what you don't know. Warren and I missed thousands of opportunities because we didn't understand them. We knew the boundaries of our competence. Confidence outside of competence is simply arrogance, and arrogance is expensive. Take a test. For every decision, write down 3 reasons why it might fail. If you cannot come up with 3 solid reasons, you are too overconfident. Force yourself to be a pessimist regarding your own ideas. The poison of envy and false narratives. Now let me tell you about the most destructive emotion for wealth. It is not greed, it is envy. Greed at least pushes you to want more for yourself. Envy forces you to care about what others have. It is poison. You see a neighbor buy a new car. Your car suddenly seems old, although yesterday it was excellent. You feel inferior, and you buy a car you cannot afford, just to keep up. A friend goes on vacation, and you, afraid of missing out on life, book a trip on credit. Neither of these purchases made you happier. You are buying not out of your own desires, but out of comparison. Envy turns you into a spending machine, and it is insatiable. There will always be someone with a bigger yacht, a better car. This is the hedonic treadmill. You sacrifice your future wealth for the appearance of current wealth. Rich people have killed this instinct in themselves. They do not care what others think. They do not play status games. I have lived in the same house for 70 years. Not because I can't afford better, but because it is sufficient for me. I defined my enough a long time ago and stopped competing. And the last trap, your love for stories. Your brain is a narrative creation machine. It wants the world to be logical. The market is growing. The economy is strong. The market is falling. Investors are afraid of inflation. The exact same facts tomorrow can be used to explain the opposite movement. These are all fairy tales. You create an illusion of understanding chaos. It makes you think you can predict the future. You cannot. Rich people ignore news and stories. They look at fundamental business metrics, at trends of decades, not at the noise of a single day. The system of rationality. How to defeat yourself. Knowing these traps will not save you by itself. You can understand everything I said and still make these mistakes. Because these distortions are emotional, not intellectual. They happen faster than your reason kicks in. You need systems. You need rigid rules to force the rational brain to check the intuitive one. Here is a practical toolkit. The 24-hour rule. Never make financial decisions in the moment. Wait a day. Let emotions subside and logic kick in. I have followed this rule for 70 years and haven't regretted it once. Decision journal. Write down why you are making a decision, what you expect, and what could go wrong. Then review your notes. This is the only way to see your thinking errors. Checklist. Create a list of questions. Am I influenced by the crowd? Am I anchoring? Is this envy? Go through the list before every investment. Default no. Train yourself to say no by default. Most opportunities are mediocre. Say yes only to obviously magnificent things. Seek dissenters. Find a smart person who disagrees with you and listen to them carefully. Your brain hides risks from you. Let someone else show them. Failure journal. Record every mistake of yours and analyze which psychological glitch led to it. Find your patterns. Wealth is not secret knowledge. It is correct thinking. And correct thinking is unnatural. Your brain is programmed to make you poor. Now you have a choice. You can continue living on autopilot and remain a victim of your instincts. Or you can do the hard work, build systems, and start thinking like the rich. It is difficult. It requires going against your nature. But that is the price that must be paid for freedom. There is no third option. Choose wisely.